Greg, you think that this is a head fake at this point?
I do, exactly as I said in July, largely based on the same premises. We continue to hear in recent days that the Fed is likely going to pivot. This has largely been a self-fulfilling prophecy to some extent, follow on from the crowd saying the Fed has done too much to now the Fed needs to pivot, that we've reached peak inflation, which we very well may have. But the point is that unless the levels of inflation are going to come meaningfully down, unless we have that in print, then this is all sentiment driven, just as it was in July. The only thing it's lacking is Jerome Powell tripping over his words and inadvertently giving the market the green light to put risk back on, as he did back in July. He's become much more careful in how he articulates it. And I thought they were very clear in their message, not only out of Jackson Hole, but out of last FOMC, that we should expect another 2 to 3 rate hikes, likely 2 this year, and that their ideal rate is 4.5% on Fed funds. And we're not there yet.
Add to that some pretty hawkish Fed speakers yesterday. Mary Daly, the San Francisco Fed president in particular, talking about how the people she's hearing from who are hurting because of inflation, and that's particularly at the moderate and the lower end of the income spectrum. They are very focused on inflation. Greg, one thing we got yesterday, though, the JOLTS number did show that the job market may be showing some signs of potentially turning over. You're still talking about job openings north of 10 million, and that's a big number. But it's the first time we've fallen below 11 million in a very long time. People are looking at that saying those are signs that the job market could be turning. If we see that, if you see unemployment rise, would that be enough for the Fed to say, OK, this is another part of our mandate, we have to look at that, too, or don't count on it?
No, I don't think it is, particularly in terms of the magnitude that we're talking about. Because remember, yes, it's dipped below 11 million openings, but we still have an excess of 2 million or so openings to people seeking work. And so as long as that excess exists, then there's really very little risk to the labor market. But they've already addressed this, right? And they want to make it clear that they well understand that there's going to be some slowdown or contraction. They well understand that unemployment is going to tick up from here. I think you need to see 3 things for the Fed to start talking about a pivot. Obviously, our colleagues are all too happy to do it. Again, sentiment driven. But for the Fed to start talking or at least hinting at it, you need to see unemployment probably tick up towards 5% again. We need to see a meaningful contraction in the economy. Obviously, 1.6% and 90 basis points, I don't think most people would consider meaningful. So I think you need to see something on the magnitude of 3% or more to test that Fed resolve. And short of those 2 things, or the third thing, short of inflation coming down 100 basis points or more, there's nothing here that is going to get them. And notice, Becky, they're all on message now. They're all on message. Mary's saying the same thing as Bullard's saying, is the same thing that Powell's saying. So I think they learned from Jerome's snafu back in July.
Greg, what would you tell people to do then as investors? Sell any bounce like this?
I would be. I would be looking for this as an opportunity to lighten, as we did back in July. Obviously, where you need to have equity exposure, there are some safe havens. There are places where we have some combination of structural advantage given the macro environment, where we have secular tailwinds, where we have inelastic demand. Energy is a great spot. Energy is one of the few sectors where we actually saw estimates rise in this quarter. As we've all noted, the estimates came notably down, almost historically downward revisions in the quarter, but except for energy. And even though the commodity prices have come in, Becky, even though they've come in, energy still outperformed and will likely have a supply shock in the 4th quarter.